Good morning, everyone, and welcome to the European crossover webinar. We just have some European data that just came out on current account for Eurozone data. So as we come into today into the States, we will have National Activity Index at 8:30 Eastern, as well as Canadian Wholesale Trade. That's going to be it. So it'll be a light data for today. And equities are just trading S&P futures at 28.52. There hasn't been too much movement compared to some of the moves we had over the last few weeks. We've seen some very wide moves, and we'll go and take a look at that right now. You can just see, just to a certain extent, a tighter range. We did push it up as high as, I think it was, if you look right there, you can see it, 28.75, and then a retest of that area here before dipping back again here. And just a little bit under VWAP. A very similar setup here with the Nasdaq also. But not really a whole lot of movement overall. I myself just rather wait for the cash equity open. You know, what was it, a couple of weeks back or 2.5 weeks ago, 3 weeks ago? I remember coming in on a Sunday night thinking it was, we had already pushed up quite a bit and staying up the whole night trying to manage the position, doing pretty well. And then in this cash session, it just took it up for another leg. So a lot of mixed, I wouldn't say mixed signals, but how this open is going to be, and and actually a little bit of a disappointment if you think about it. What the market has been hanging its hat on is any little positivity, or not beyond more than little, but it does look like across Europe things have started to level off. And I think in Italy, I think the numbers were the best since April the 12th, I think it was, something like that. So you would have thought that we would open up much stronger. So once again, rather wait for the cash equity open, see what happens. I mean, there was a little bit of a move back in here. We have dipped back, but let's see what happens once we get cash equities open. At least that's my thought. I'd rather come in with, as opposed to stepping in. Like I said, we have gone to dip back a little bit further, but more interested to see how they open them up at 9:30 Eastern. We'll see what happens if they make a move, but I really don't expect anything of any real significance here. And NAS and SPOO's basically the same setups right here if you look at that. We'll go and take a look at crude oil. We have gone and moved into the June as a front month now. You can see we're 23.54. We've actually taken another dip. If you look at this, it's going. So we even dipped even lower here. We're on the 2-hour chart. Certainly, you would think that would have a tendency to weigh on equity futures. Um, it did to a certain extent on Friday. It worked like almost like a ball and chain. We did see equity futures bounce up late in the day. People didn't want to be short over the weekend. Also, we're seeing gold really start to come off after those strong moves of the last week or so. So let's just go and move into the news now. So the dollar firm as caution creeps back, Kiwi jumps as lockdown to ease. The dollar found support on Monday as global growth fears hit oil prices and commodity currencies, while the New Zealand dollar rose on news that the government will begin to relax strict virus containment measures from next week. The oil-sensitive Canadian dollar, Russian ruble, Norwegian krona each dropped 0.5% as weak demand and a supply glut crushed U.S. crude prices to a 21-year low. The dollar move weighed on riskier Asian currencies and pushed the Aussie dollar a touch lower, but the Kiwi jumped up 0.5% after New Zealand Prime Minister Jacinda Ardern said a gradual rollback of lockdown rules will begin on April 27th. The nation, which had recorded just 12 deaths from the COVID-19, the respiratory disease caused by the new coronavirus, will lower its alert level one notch next Monday, allowing some businesses to resume and review that stance on May 11th. The market wasn't expecting quite such a short time frame for the potential relaxation of restriction levels, said Ray Trill. I believe, however, the risk sentiment today is not quite as positive as it was. He said there's still a degree of safe haven support and level of demand for the U.S. dollar that is going to transcend whether or not we are risk on or risk off mode. The Aussie dollar sat at 63.54, about 1.5% below a month high hit last week, where the Kiwi hit a 3-session high of 60.59. Moves in the other majors were modest, but together with cautious trade in regional equities, markets seem to be capped a few weeks of risk appetite and dollar softness. The dollar was a tad firmer on other majors, gaining about 0.1% on the euro and pound, and on the 0.3 on the Japanese yen. It was bought 780 and traded to 24.78 per the pound and 8.70 per the euro. The New Zealand's move to ease its tough lockdown comes as the country has all but halted the virus spread. It has been one of the lowest per capita case counts in the world and has traced all 8 of the 1440 national cases to its source. The relaxation is only modest, however, for the resumption of the construction, forestry, manufacturing, and not socializing, but Ardern said further easing would be considered next month. The picture elsewhere, though, is less clear and joined by a wave of economic destruction. An almost 12% drop in Japan's exports in March report on Monday, the steepest slump in nearly 4 years, augurs badly. In the U.S., where the death total rose to more than 40,000 on Sunday. State governors have sparred with President Trump over virus testing capacities and how quickly economies can reopen. Britain is not considering lifting its lockdown, a senior minister said on Sunday, while leaders in Ireland and Canada have flagged long-lasting social distancing rules. We are coming into the eye of the storm, said Chris Weston, head of research brokerage Pepperstone in Melbourne. And as the markets start to focus less on the virus headlines, or at least will be less sensitive to the better news, we will focus more on the lasting effects on the economy and solvency. Elsewhere, China's yuan eased after a cut to a benchmark interest rate, and Mexican peso dropped back about 1%, following Moody's downgrading and sovereign credit rating on Friday. Gold falls as the dollar firms amid doubts over the U.S. restart plan. The gold fell to more than 1 week low on Monday, dragged by a firmer dollar and doubts over the United States' plan to reopen the world's largest economy as the novel coronavirus pandemic showed no signs of easing. Receding optimism about growth prospects as a factor I would normally expect to be supportive of gold prices, but we aren't seeing that at the moment, said Michael McCarthy. It might have to do with the strength of the U.S. dollar, which hasn't made a particularly large move, but it's higher. The dollar index, which also considered a safe haven, rose 0.3 as investors braced for more dire news on the fallout from the virus, and governments across the globe moved only cautiously toward an economic restart. In the United States, governors in the United States, hardest hit by the pandemic, sparred with Trump over the claims they have enough tests and should quickly reopen their economies as more and more protests are planned over the extension of the stay-at-home. Caution gripped Asian markets ahead of a busy week. Corporate earnings reports and economic data are expected to show the damage done by the global virus lockdown, that is. At this point, markets have split into liquidity or risk assets. The dollar, the yen, the U.S. government bonds on one side, and virtually everything else on the other, including gold, said Daily's FX strategist Elias Bivak. So as we get fears that this recession will be substantial and disruption, the economic activity will be longer lasting. Gold is one of those things that will be liquidated. Gold generally gains from reduced appetite for the risk, but has on occasion moved in tandem with equities, with sharp sell-offs in wider markets, prompting investors to sell precious metals to cover losses elsewhere. It's also been hit by the physical demand from top consumers, India and China, where lockdowns have stalled activity. So with that, we're going to move into the analysis. Starting off with the euro. So last week, the euro, after tagging new lows on Friday, managed to close above Thursday's close. The pair is in no man's land, unable to sustain rallies off significant lows. Focus will turn to a key support of 776 with resistance at 956. And what I was referring to here is you had these, huge, this was huge down here. We did get a pretty good rally, but we turned around and gave it, half of it back, more than half of it back. That's at least 61% back, okay? Then we come off in 776 as a key weekly. We run off that and it looks like, okay, this thing might be ready to take off. We turn around and slide right back down. So that's why my point here is it's pairs in no man's land, unable to sustain rallies off significant lows. So from here, the potential is really for a move back down to 776. Now we are slightly higher for today, but this is a range that we're looking at potential where this market can go to. Now we can look at what we would look at for the support for today, which is going to come in. You can see right here coming across here and here, right there, and just before that low, it's going to come in at 814 for key support, but overall, we're going to be focusing potentially for another move back to 776. We'll see how things turn out, or they could make that move to 956. So for today, it's 814. And resistance is going to be right there, which coincides right there with this bar, essentially this low. We'll go just with the bar right there, which is going to be 911. We'll move into cable. So cable defended 24 even on the pullback after reaching a weekly level 2602. Remember how we had 2602? We were spying for that, and we got there. Even though we closed above it, I still said that was going to be the key right there, just to hold there. We did kind of finally turn around, but that had already been a pretty good, sizable move before it got up to 2602 and found avid sellers. The pair is open to testing 2340 before a potential retest of 2602. Resistance will be 2556. So resistance is going to be 2556. And we are looking for a move back down to 2360. Support for today, though, nonetheless, is before we would get there, will be right there at 2402. But we are looking potentially for a move down to 2360 before we make a retest of 2602. Once again, the bias chart is just for the next 24 hours out. Moving on to the Aussie. So the Aussie retains its upside bid after challenging 64 even earlier in the week. Resistance will be 6409 with support at 6303. So we're looking for a potentially move back up in here. I mean, they still have the bid because we got this little mini hammer. So they're going to try and press it a little bit, but we're looking for resistance coming in here at 6409. And support at 6303, this key level there. Now, Kiwi closed the week after defending the critical support area of 59.14. You can see that we had that as a support that we're looking for most of part of the week as we're moving down here, and thought we'd go and challenge down there. Resistance will be 60.89. I think we've actually come pretty close. No. So 60.61. So resistance is going to be 60.89 with a close above, allowing a challenge of 62.05. But 60.89, a close below 59.14 will be challenging 57.88. So it's going to be 60.89 on the upside. And on the downside for support, it's going to be right there. See that coming across here? All these touches, 59.70. So look at the dollar CAD. The dollar CAD paired back after a snapback rally towards 42 even. Resistance will be 41.36 with support at 39.23. And the peso, after posting a gravestone doji on Thursday, the peso pulled back to support at 23.60. Remember, we had that right there on our support at the time. The peso is open to a further move to 23.09. Resistance is going to be 24 even. Now, like I said, when you looked at the news, Moody's downgraded Mexico, so that actually certainly put a bid with the peso, with the dollar versus the peso, and has actually pushed it even back higher again. We had our resistance, so still nonetheless at 24 even. We have poked our head above there. Certainly that was going to have some impact. To me, the key is going to be this bar right here. And we've actually, it got above that. And so that's going to be 24.14. Well, actually, it's going to be 24.15. See that bar right there? So it's going to be 24.15. We actually got above that by just a hair, but that'll be resistance. And certainly the impact was from the Moody's downgrade of Mexico. So resistance will be 24.15. And support is going to be the open right there. It's going to be 23.72. Certainly that big news kind of overwhelms how the market's going to trade. I think we're open to move lower immediately, but certainly that downgrade weighed on the peso, and obviously inversely the dollar peso moved higher. So the dollar yen is in a holding pattern sub 108. The pairs failed to rally despite the backdrop of rising equities. The resistance is going to be 828 with support at 715. A close below 715 will allow an immediate move to 633. So it might even be a little bit generous to even say at this point that the resistance is 828, considering when you think about how the move we've seen, the snapback rally we've seen here in equities, and we just actually seen the dollar yen go the opposite move. And so we're actually, with equities a little bit weaker today, 828 really does seem a bit of a stretch, but we'll go on and stick with that 828. At least if things were to pop up, you know where would be the key area for not to get beyond. But it'd be 828. Support 715. Onto the dollar index. The dollar index formed a tweezer top over the last 2 days of the prior week. The pair is susceptible to a move to 99.11, followed by 98.77. A close above par 45 will allow a move to 91.53. So resistance is going to be the par 45. And you can see this tweezer top in front here. And we did say it's susceptible to move to 98.11, but this is going to be support right there. You see right there? The close right there, which is 99.49. Okay, let's take a look here with the Kiwi yen. Kiwi yen posted a mini hammer. You can see that on Thursday, allowing for some short covering on Friday. We certainly saw that here on Friday. We're starting to see that continue to follow even further. The pair will need to close about 65, where resistance will be found, and I think that should have been 65.60. Okay, 65.60, where resistance will be found. Support is going to be 63.85. So 65.60 is going to be resistance. And looking for support right there. You see that bar coming across? That's going to be support on the dip. 64.52. Now let's go and move into the euro yen. The euro yen settled the week below the pivotal support of 1704. The pair is open to a move to 1584 with immediate support at 1655 and resistance at 1741. Yeah, this has really stayed very, very weak. So resistance will be 1741. And immediate support 1655. Wow. May crude oil is dropped down to 14 and change. It's fallen $4. I'm just not keeping track of it, but because now June's a front month, but it's down to $14 a barrel. Holy smokes! June, which is the front month, is at 23.17. Uh, you would think that that's going to weigh on equity futures, and it is a little bit. It's a 28.45 for S&P futures. Maybe we'll start to see that high put in. We're at the bottom of the zone right now on the 2-hour zone in the S&P futures. But certainly oil continuing to fall is going to weigh, and that pressure may go on and stay for the bulk of the week. Well, not for the bulk of the week, but I'm saying before that comes off the board. So we may still see us, weakening and staying weak throughout the session. Let's go on and move on to the Euro on. Probably should go and keep that there just to be on the safe. Let me see. I keep track of it. I had already taken it off of yeah, 1426 right now. I want to kind of keep track of that because I think that's going to be key. Wow, that's unbelievable. So let's go and move into Euro on. So the Euro odd continues to challenge the weekly support level of 77. A closing break lower will send the pair to 67.78. Resistance is 71.61. So support nonetheless is going to be right there. Just call it essentially 70.02. And resistance 71.61. We can probably tighten that up a little bit further. You can see that the high here and here, that's actually going to be, well, 71.70. I had resistance 71.61, so let's just stay with that 71.70. And let's go and move into the Euro Kiwi. So the Euro Kiwi posted a gravestone doji on Thursday. You can see that right there. Allowing for a follow-through move on Friday to 79.80. Support will be 78.45. Low today so far has been 79.12. So support will be 78.45 with immediate support at 79.12. So the support, the low has been, well, 79.12, not bad. So that's our support right now, 79.12. That's been the low so far. But we think that potentially it can get down to 78.45. Resistance is going to be 80.86. Well, we're already coming up. We tagged this low. So the resistance is going to be key. Is going to be right there. You see this bar here? Because we're already going to have to pop through these areas here. And that bar there's going to be, well, 80.60. Well, 80.60. We had 80.96. Go with 80.50. That might even be a bit of a stretch. And let's go into the Aussie yen. So the Aussie yen closed the week slightly lower after challenging the resistance level of 68.69. You can see that. The pair remains bullish with a close above 69.03 to see a further move to 70.23. So resistance will be 69.03. We are at this resistance level, but they may try and push those stops a little bit higher. Once again, it'll be 69.03, which they have to really get a move on this. That will be support 67.85. Let's go ahead and move into the guppy. Now the guppy is marking time at 34.50. Immediate support comes in at 33.53. With the close below that, trigger to move to 32.20. So immediate support is 33.53. Resistance is going to be 35.27. Well, the high so far for the session has been 34.72. That's been the high. And the prior highs before that on Friday was 34.97. Well, 34.98. So we'll go with 34.98 to trigger a move higher. And lastly, let's go into sterling odd. Sterling odd finished the week right where it started. The pair is open to test 84.83. Oh no, I said 84.83, meant 94.83. The confluence is with trendline support. Resistance is 97.22. So it's going to be potentially, we're looking for 94.83. We said 97.22. Well, we got up to 97.07. At this point, we'll go right there with resistance will be 96.72, 96.70. And that'll conclude it here for, as far as currencies. We can go in and take a look. Crude oil still pressing lower here. It's 14.28. Let's go there. Look at this. Unbelievable. I've already turned here to June. So there's June on a 2 hour at 23.23. But here's May. Front month is now June. That's where the trading is. But you can see, look at May. Wow. 14.28. Unbelievable. And certainly that's having its impact on SPOOs. And you can see here, what I mentioned here, we're revisiting the bottom portion of this zone. You can see the significance of this zone here on the 2 hours. We're trying to come a hair off of that. But certainly it's having its impact on that. And also Trump wants to open up the states sooner. And like I said, they're saying the governors are sparring with him as to how quickly they can open that up. And that's probably going to take a bit away from this jump that we saw. Remember, what was it on Thursday? The remdesivir, the testing on that, the University of Chicago, and then also Boeing Aviation said they were going to reopen the following week. And we just saw, we also started to see potentially a little bit of a leveling off. Matter of fact, I think Cuomo said that the numbers are really starting to look good, but that they still have to remain, very cautious. Well, all that added up to this moving higher. But I thought potentially we could have, when I saw the news on Italy, that I think it was the best data since April the 12th, that I thought we were going to open up much stronger. So when you see this open lower here on Sunday, and then on top of that, you have energy futures really weighing on that. Once again, we may just kind of finally start to break down because we've had this move that's been like, wow, look at that move. It's been some kind of a move. So we could maybe today will be the first day of the start a bit of a breakdown. We shall see. But that's been one heck of a move. Currently, VWAP is right here at 28.50, basically 28.57. And gold still remains under pressure at 16.89. Haven't gone as high as, that's June gold, haven't gone as high as 17.90. So it's amazing we're over $100 lower from April 14th. So with that, we'll see you in the chat room. I'll get the bias chart posted, and thanks for joining us here in the European Crossover webinar.